Hey there, everybody. Welcome to another weekly stock market update. Today is April 19th, 2024. I hope you're doing fantastic. We're in a red market. So if you're not short, you're not in cash, you're not having a good week because we went red last week. And if you saw me on the market update, you should have seen me make a red call. And red calls usually work out. They don't always work out. The system works out about 75–80% of the time. But time in the market is important. If you're in the market right now, you know what I'm talking about. So let's talk about the market. We got 4 red lights, and you can see 7 days in a row since last week when we went red, basically on the first or second day of that market as it started down. Here we are at the bottom, trying to hopefully make a bottom. I don't know. I think there's still a little bit more to go. I mean, everybody's skittish about the Fed, and what I have to say about the Fed, just so you know, the Fed is not doing QE anymore. It's not qualitative easing, because they've already used that term up. They're going to call it something else. They're doing the same thing. And whether it's the Fed or the Treasury, they have to print money. Okay, so it's different form if the Treasury comes in and buys Treasury bills and notes and bonds and props up the market. But that money is being created from something. And when it's created from something, it's inflationary. And inflation means invest in hard assets. So gold, Bitcoin, stock market, which is not that hard of an asset, but things that are real estate, things that are hard assets, those hold their value in an inflationary environment. And that's what you want. Everything else gets eroded. That paper money is eroding everything else, right? So if you put money under the mattress this year, if you did it last year, you lost 15% of your purchasing power this year. If you do it this year, you're going to lose another 15% of your purchasing power. I don't care that they say it's 3%. You and I both know it's not 3%. That's my macro rant for the day. Taking a look at the NASDAQ, it is obviously down. It is now leading us down, I think. So, and you're seeing it in some of the big NASDAQ stocks. Remember, a lot of this blow up happened on just a few stocks. It wasn't every stock that went up, but a lot of them did. They just didn't do it to the magnitude of the big ones that really drove these indexes up. So the NASDAQ is down. You can see the S&P 500 also down. Not quite as severe, but it's certainly under the 50-day moving average. They all are. The Dow Jones under the 50 and doing a little 5-day consolidation down here. So it was leading us kind of down. Should have listened to the Dow when we had our chance, right? When it gapped down on that day. What was that day? I don't know. Looks like March 30th or something like that. The New York Composite, 7 days in a row down with a little tiny consolidation there at the bottom below the 50-day moving average. And I have a saying, not a lot of good things happen below the 50-day moving average. So we need to get it back above the 50 for things to happen. I suspect there's some profit taking going on, and a little Fed fear, because the Fed is trying to scare you with one hand, and then over here they're going to be propping up the market and telling you it's not inflationary, but they'll all be long gone by the time we all that inflation hits and they have to be accountable for it. So they don't care. The CBOE volatility index, you can see this has been spiked up today, huge to 22, 21, whatever it is, and it kind of went back down as the market started to kind of shore up from the Israeli bombings or whatever the news du jour is. There's always something that moves something, whatever they say. I think it's all just the market ebbing and flowing, supply and demanding, and doing its thing. But the volatility index, the panic index, is up from that $12 level up to the $20 level. That's a significant spike in a couple of weeks. So that's telling us something. That's telling us we may see that 2308 midterm high there in the volatility index before we're done here. The Dow Jones transport average, the transportation average, according to the Dow theory, generally leads the Dow down or up. So if we have a good performing transport index, that means that people are moving data around the country, and that generally takes stocks up. And when the opposite happens and people aren't moving so many things because they're not buying so many things, we're going into the summer, people don't buy a lot of stuff in the summer, they usually travel, then you're starting to see some sell-off. So I think that those are moving in tandem. The New York Stock Exchange market indicators, and you're getting a lot of the stuff from our mastermind call today. We have great discussions after we go through kind of this market update that you guys get if you tune in. And by the way, we have a newsletter called Insider Tips. It's free. You can join it at cashflowmachine.io/tips. The link is in the description if you're watching on YouTube or Rumble. We want to get some subscribers because I provide a lot more value over there. You get my stocks of the week if I have them. You get my lists. You get the market updates like this. You get it all kind of in one spot. So might as well go there and subscribe. And if you haven't subscribed to this channel, I'd love it if you would do that. 72% of you are watching this without subscribing, so it'd be nice if you subscribe and get this to more people if you think it's good. Give me a comment if you like it. If you don't like it, tell me that too, so I can improve. Always trying to learn. All right, let's keep going. So the market indicators are, the bottom one is the one I look at. That is the moving average of the highs and the lows. And we haven't seen those two converge since basically, when this market went green in early November. And so it's been 7 months, and now here we are converging. So we're getting a lot of new lows versus the amount of new highs. All right, Apple. Look at Apple, just having a lousy week after a hopeful spike up on high volume last week, and it has now made a relatively new swing low, and taking out that 165.67 swing. Probably do it on low volume, which means maybe we get a bounce. But Apple's been pretty weak in this whole first quarter. Just like this next stock, which is Tesla. And you can see Tesla, which has earnings in a few days, has a couple of gap downs this week. There's all kinds of news on Robotaxi and the Model 2, and nobody knows what to make of it, so people sell. And there are lots of revisions on their earnings. And, there's a lot of weird stuff going on with Tesla. Still the number one selling car in the world. So I don't know what all the fuss is all about, but, people are freaking out that maybe they're not growing as fast as they were, and they don't believe in Robotaxi, whatever it is. The company can do great and the stock can be selling off, and that's what's going on in Tesla. Nvidia is having a bit of a sell-off today as well. It's down, last time I checked, it's down about $28, breaching its 50-day moving average. That's a problem for Nvidia, but I think Nvidia still one of the strong stocks out there. AI play, just had to fill a couple of technical gaps. It may fill one other one out there about the 662 level. So I think the selling may not be over, but I don't think we're going all the way back down to the breakouts at the 505 level. But who knows? We get more red market, more selling. Anything could happen. Certainly anything that's happening right here on SMCI. SMCI, last I checked, was down $130 at right around $800, and that's a big sell-off. I mean, you can see it spiked up from 357 to 1229. And then it's been filling, whatever gaps are out there. There's a gap that it wants to fill. I've highlighted in yellow there. It wants to fill around, I don't know, it looks like about 740, 750, 760, somewhere in there. And I think before this red market is over, Supermicro is going to go and fill that. And, I think it's a great play on the AI boom, but there's a lot of profit taking. And then profit taking begets profit taking, and it certainly does if it's on high volume, which it isn't on SMCI. So it might be your Aunt Susie taking some profits from those highs as well. All right, one more is On Semiconductor. On Semiconductor is doing this little pattern where it goes back and tests something from several months ago, and it's testing that level of about 6150 on 100 million shares, but it's doing it on pretty light volume. And on a light volume retest of a swing, generally you get a bounce off that, but we got a red market, so it's hard to get a bounce off those, but we have to keep an eye on that one. If it's low volume and does less than 101 million shares, we might be getting a bounce. Right now, last I checked, was around 35 million shares for the week, and that's nowhere near the 100 that it needs to blow through that and create a new low. So I think we're going to get a bounce here, but it is that H pattern that I don't like to see on the screen. And, that could be problematic. Well, let me do one more. Amazon. All right. Amazon is testing the 50 right at the 50 today. Amazon looks a beautiful chart, just chugs right up. And it's one of the strong ones with a 93 relative strength rating. So Amazon's probably going to be one of the leaders when we come out of this red market, and will take us higher as well. So listen, that's about it. Listen, be careful out there. It's a red market. That means you've got to keep your stops in. You've got to go to cash. You've got to protect your profits, all those things that you should be doing that hopefully is in your trading plan. You should have a trading plan, by the way. That's what I always teach and talk about. Very important, and stick to your plan, because over time, if you've thought about it, it usually works out. Thanks for joining me here on the weekly stock market update. I hope to see you next time. And meantime, have a wonderful weekend. And remember, there's always another green market coming around the corner. So talk to you soon. Take care.